strategy is like this. When we have these MAs above this longer term one, so the green one is the longer term one. That's the bullish scenario. That's when we want to take bullish trades, long trades with confirmations. And when this is like this, everything is below. That's why we want to take short trades, and ideally take that from that 200 MA itself, but not always we get the chance. But when there is a cluster, that's where we can take. I'll share the examples, each examples. So the most the easiest kind of trade example is this. It tests, it confirms with a green candle. It's an easy opportunity. It's a 30-minute candle. So there is time, and we have the stop loss below this. This is quite big SL, $18. So sizing has to be like that. And then we can leave as much as we want it to. There is a consolidation there. So time is being spent there. We may want to protect the trade in some cases, take profit or move the SL to B. That is dependent on the situation, that is dependent on the specific example, that is dependent on many things. This is also the same trade. So this would be also the same example. The SL is even more here, and like I said, we can do whatever. We can keep it running. It keeps running for the whole thing. So it can keep running for 6-7 hours, but we have the capability to close it at any point when we see the profit is satisfactory. So that's the first kind of trade: the test and the confirmation. Test and the confirmation. That's the easiest kind of trade, but the market will not be as easy, uh, as frequent. So there will be situations like this, where the price is below, ranging below, ranging below. So we want to short. We think that we want to short, but the MAs are above. So the MAs are above. When the MAs are coming below, not all of them are coming below. So the situation is no trading zone. So this is a no trading zone. When the price is below, but the MAs are above, this is a no trading zone. And that's almost for 2 days. There is no trading zone. And when it goes back up, above all the MAs, this is where this goes back all above all the MAs, that's where things turn bullish again. So at this point, at this candle close, things turn bullish. But that's not the trade signal. The trade signal has to be here, which is testing and confirming. But it is confirming very far away. So the SL in this case would be $42. So if we are comfortable with that SL or sizing, whatever, only then we can take it. Otherwise, we can skip it. We can skip that trade, move on to the next one, and yeah, that's how it has to be in cases like this. Now the third kind, when there is a cluster but the price is above. So this is proper confirmation, and uh, this is again, price is going below but the MAs are above, so no trading zone, things like that. Things So let me find the example. Yeah, this is the one. So this is a scenario that goes on for quite a while, right? So this is a cross environment that goes on for quite a while, and this is a trade. Whenever we close it, we don't have a trade. In this scenario, we have a trade, but when it breaks below, we don't have a trade. So after this period, we don't have a trade, and it goes tries to below. But this is a cluster. All the MAs are quite uh, like in a very narrow range. So this is 44 and the lowest is 40. So in a $4 zone, everything is there, and the price is piercing through all of this. So this is the breakout trades, kind of trades I talked about earlier as well. With a solid green candle, you can see there is absolutely zero wicks in this candle, no wicks at all. And in that case, with that SL, I think $12 or $13, that's the perfect trade. These are the third kind of trades. Then there are others where the price is not coming to the 200 MA. So this is a very bullish scenario. It's going on, but the price is far from the 200 MA. So this This is not coming in. So what we'll have to wait is for a scenario like this, when everything is in cluster. Like the before one, everything has to be close by. So everything is close by here, and if we take that, if we just take that confirmation or that confirmation, whatever, whichever of these confirmations that we take is going to work eventually, and the first one being the best one, I think. So even if the SL is a bit higher, so the SL being a bit higher is actually a positive, because that gives us a protection, and because that candle is stronger, that's why the SL is being higher. That gives us momentum as well. So this is again confirming that. But why would you say that this is not the confirmation? Because this is not clustered together, so everything is far away. Similarly to this one again, this is far from the 100 MA and 200 MA, and it's confirming. But I would encourage that we don't take this, because 50 and 20 MA are not that trustable as 100 or 200 MA. So when 100 and 200 MA is being confirmed like this, we can take that, but 50 and 20 is not trustable in that manner. So that's the fourth kind of trading. Uh, Now, on the short side, every principle remains the same. So this is a confirmation, this is a confirmation, this is not because it's breaking out, this is not, this is because breaking out, and also the moving average is going beyond there. But again, this is one because everything is below, and then it's confirming. That's the very sort of view. But yeah, that's the kind of trading that, again, this is again something. Everything is clustered together. It's going towards the 200, but it's not reaching the 200, and then it's breaking down. That can be a short, but yeah, it just have to be situational. And if you want to do it, because it's a very big SL, you might skip it. You might wait for this next opportunity, which comes again in this test. But then again, we are not clustered enough. Everything is far and not together, so that doesn't work. So there will be situations that we will reject trades for such reasons, uh, and yeah, that's why the number of trades will be less, uh, and the quality will be preferred. There is a fifth kind of situation where all the four are close by. So let me draw it. So the distance between the all the MAs is less than $10, so everything is pretty close by, and the 20 and 50 is being confirmed. That can be something that we trade, and take that upside as well. So something like this as well. So this is confirming downside. This is not confirming because it's the 100 is above. So this is a scenario. This could be a scenario, a fifth type of trading scenario. But yeah, what essentially we have to do is we have to be above the price. The price has to be above the 200 MA, and the other MAs have to be above the 200 MA for us to long, and the opposite. The price has to be below the 200 MA, and the other MAs have to be below the 200 MA for us to short. These are the scenarios that we are thinking of, and that's how we short. The best shots are coming from 200 MA retests itself, but there are a few other types of execution that can happen on these assets as well. Typical holding time is not there. Some trades might run for a few hours, some trades might run a few days, even, because it's being an impulse trade decisions. So it's important to calculate the risk and understand the risk, what is the execution risk, and make sure to take profit, or make sure to uh, book partials on occasions, or move SL to break even to protect these trades, because these are not normal trading style. This is confirmation of the key levels, but we are not actually doing the following the trend, or following the momentum, or whatever. We are trusting for price to hold certain levels because they are important levels, and because they are conforming with the candle close. So we are confirming the candle close, but we are not essentially uh, just following through on something. So yeah, that's about it. Uh, Scenarios like this, these are the ideal of idealist con- consideration like this, very ideal situation. So yeah, that and waiting for, like, in cases where there is a big breakout, let's say for example, yeah, this one, waiting for retest or something better. Yes, this is being confirmed. So waiting for a retest not does not always work. So if we are waiting for retest towards these levels, we would miss the opportunity to the further upside. So that's why we are taking the candle close and just putting the SL below the candle lowest point. So yeah, that's that. Those are the kind of trades that we will have, and that's the approach to the strategy. It's very simple execution. It's very simple idea as well. It's a very simple thing to follow as well. And essentially, what we are looking for is price to continue on its flow and just take support or resistance from these moving averages. When the changes happen, when the shifts happen on prices, it will generally be broken. So it's broken, as you can see. When shifts happen, so let's say where did the last shift happen? So this is where the last shift happened. So we will see that it is not being confirmed, it is broken. So will be protected that way by price itself. That's about it, I think, in this strategy approach for gold, from key inflection point on discretionary momentum execution.